this is Rachel Marshall, and I want to bring to you a new idea today that layers on top of everything we've been talking about. Now, you know, I'm very passionate about helping people to be in control of their cash, have control of their capital. Now, most people I find do not have much savings, and the savings that they do have, they feel like they're not earning anything on. And so they look to investments to be able to get a higher rate of return, and that opens them up to risk, which means that they're at the risk of losing everything. And unfortunately, we've seen people lose a lot of money, whether that be in the equity in their house or whether it be in investments that were in mutual funds in the stock market. And so I am passionate about helping you to find ways to have more of your money in your control that you can access, that you are able to use. Now, what this looks like is how do we store cash in a way that really gives us great benefits? What we need is we need a place that's safe. We know that we don't want to be able to lose that money. We don't want it exposed to risk at all. We also want it to be accessible. So this could be called liquid or accessible. This is money that I can convert to cash readily and be able to utilize. I can use it for emergencies, I can use it for opportunities, but either way, I can get to that money. There's no barriers, there's no begging to borrow the money, there's no applications for it, there's no requirements for how I use the money or how I don't, or how quickly I can access it or how I have to pay it back. Really, we want to say, if it's mine, I want to be able to use it. And the other thing is that we really want to have growth. We don't want to sacrifice the growth. Now, right now, we're knowing that we're not getting much for our liquid savings. If you go to a savings account, you're getting 0.06%, according to the FDIC. 0.08 for a money market. Those are the average interest rates that you're getting on your savings. So if you went then to CDs, you either give up some of that liquidity, you're locking it up for a time period, or that's still not performing much higher than 0.5% anyways, even if you locked it up for 3 months. So what we want to say is, how do we have money that's safe? I know it won't be lost. How do I make sure that it's growing and that I can access it? Now for this, we use a powerful concept called the private reserve. And this is built on the infinite banking concept popularized by Nelson Nash. Now I have several people that I've learned from that are in the industry that are making great things happen, and I'm going to give you some of their books as resources at the end of this episode. But what I want you to know is that this is a concept that is allowing people to build wealth outside of Wall Street, to be in a position where they are in control of their capital, where they're saving and they're getting growth on that savings, on the rate of return of their savings account, where they are in a position where they're able to use their money. So there's two things that are most important for you in order to make this happen. Number one is that we want to have our money doing uninterrupted compound growth. That means that I need to be able to hold it for a long period of time. If you've seen the compound interest growth curve, you know that it's miraculous, but the power of it is at the end of the curve, not 1, 2, 3, 4 years in, but 30, 40, 50 years in. So when you're able to hold money, earn interest, and then that adds back to your principal and you earn interest on the interest, that is what creates compound interest growth curve. We want that in your life. And we don't want to take out our money and use our money. We want to be able to use it though, but we don't want to deplete our reserves. We want to be able to leverage our reserves as collateral and use somebody else's money to do the job for us. So that's what the private reserve is all about. Earning uninterrupted compound growth, which means you keep control of your capital and being able to leverage it, using it as collateral. Now, this question then really comes down to, what is the best place to store my money that I get liquidity, safety, and growth, where that growth is compounded and I'm able to access it as leverage, not just as depleting my reserves. The number one tool that I've seen work powerfully is specially designed whole life insurance that's high cash value, dividend paying life insurance from a mutual company. The reason for this is that we're looking at the cash value component. Now, life insurance in general has a death benefit that pays out if you pass on, and this goes to your heirs. You also pay in premiums for that death benefit. But the other component that's most powerful is the cash value. Now, the cash value is a place to store cash, liquid cash. This is not an investment. It's not connected to the stock market in any way. It's not a security. And it is a place where money is secure. Now, what we're looking at here is it satisfies the three components that I'm looking for: safety, liquidity, and growth. Let me tell you how it does that. Number one, growth happens through dividends. As a owner of a mutual policy in a mutual company, you have ownership privileges. You as a policy owner are the owner of the company, and when the company is profitable, it pays out dividends to the owners. Now, the companies that we work with are highly rated, A rating or higher according to Standard & Poor's, and have a high Comdex score as well. This is for financial institutions. So those qualifications, as well as being a mutual company that pays out dividends, qualifies this as a place that is safe to store money. Now, a life insurance company also holds dollar for dollar reserves, meaning that your cash value is backed by assets on the books at the life insurance company. Now, this is opposed to in a bank environment where they have fractional reserve banking, and a dollar that is deposited at the bank can then be lent out up to 10 times. So what happens is they hold at the bank between 7 to 10 cents on the dollar at the bank. So the life insurance company is paying dividends to the policy holders, and it is earning on that money. It's holding dollar for dollar reserves as well. What this looks like, if you take the dividends that are paid and reinvest those back into the policy, this adds and builds additional cash value. Now, cash value is a component of the policy that never goes down in value. It only grows, and it grows based on internal growth in dividends. Now, when those amplify, it sets a new floor in the policy, and that policy never depletes or goes down in value again. So we're looking at growth. The type of growth we're looking at in a life insurance cash value is between 3 and 5% on average when we look at a 30-year or more span of time. I also mentioned that it's liquid. The reason this money is liquid is that you are able to, for any reason, access your cash because it's your asset. It is an asset on your balance sheet of your personal financial statements. This is your cash. Now, what happens is your cash is continuing to earn this uninterrupted compounding, and you're able to take a loan from the life insurance company, borrowing against your policy cash value. The life insurance company puts a lien against a portion of your cash value, locking it up so that you can't use it for a time until that is repaid. But the beauty of it is that you are able to go to the life insurance company for any reason. You don't have to prove why you're going to use that money or that you even have the capability to pay it back. Because it belongs to you, you can use it however you want. And you use that by borrowing against your cash value, not by depleting it. Key difference, you're using leverage, which allows you to keep your money growing. So it satisfies liquidity, safety, and growth of your money. Now, I do want to mention as well, the life insurance companies that we work with have been paying dividends for over 100 years, consistently every single year. They don't have to pay a dividend. They only pay dividends when they're profitable. They've been profitable consistently every single year for over 100 years in most cases. Now, the reason that I want to bring this up and share this with you is that I believe people are most productive when they have the tools at their disposal to make fully well-informed decisions with all of the information. I want to share with you some books from several of my mentors. Most of these people I've met personally and have a relationship with. I've learned profoundly from all of them. And in future episodes, I'm going to go ahead and dig deeper into each of these books. But for now, I just want to lay out several resources for you. One is Becoming Your Own Banker by Nelson Nash. One is Live Your Life Insurance by Kim D.H. Butler. She's written another book that I highly recommend called Busting the Life Insurance Lies. And I want to also recommend Understanding Specially Designed Life Insurance by John Moriarty, Killing Sacred Cows by Garrett Gunderson, Discovering Hidden Treasures by Dan Thompson, and Financial Independence in the 21st Century by Dwayne and Suzanne Burnell, and then Confessions of a CPA by Brian Bloom. Those are several resources. I invite your questions. I know that this is a topic that's very comprehensive, but I want to make it as simple as possible so that you can understand how it works and find out if you would like to use it in your life as a place to store cash that's safe, that's liquid, that's growing, and you're able to use this for collateralizing your opportunities. You're able to get this internal rate of return while you're also sending your money out through leverage to do other jobs, stacking your investments and getting rate of return in two places on the same money at the same time. This is the power in your life, and it's why it's the cornerstone of the wealthy to build cash and cash flow and to be in a position of keeping and controlling more of your resources. I'll be with you next time. Thank you so much. And again, please put your comments in your questions in the comments below, and I look forward to addressing those. Thank you so much. Hi, this is Rachel. I hope you enjoyed this episode of Money Secrets. If you did, like this video, subscribe to our channel, and leave a comment below. I would like to invite you to get your free cash flow generator to help you start keeping more of your money. Come on over to marshallsinsurance.com/cashflowgenerator to sign up.